Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is April the 5th, 2023. It is now 3:29 p.m. Central Time, about a half an hour before the markets are going to close for the day. Things are going pretty well today. Pretty happy with what I'm seeing, especially knowing that we are really keeping an eye out for this Friday's Bureau of Labor Statistics employment numbers that could be tremendously market moving and help to set the stage for the second quarter of this year, which is going to be a big one if we're going to be able to hit the projections that I made back in January. Now, fortunately, taking a look at the articles of the day, the first thing that came out this morning was the ADP employment number. So ADP does their own report where they survey, I believe it's 25 million households. They have the ability to look at 25 million households' information, and they're showing that payrolls are expected to rise by 145,000, but that is way below what they were expecting it to go up by, and way below those numbers that came out back in February, which means that if this follows through to the Bureau of Labor Statistics report that we're going to get on Friday, we might see home loan interest rates greatly improve. So let's take a look and see where the market is right now. We're currently up 3 basis points on the mortgage-backed security, down 4 on the 10-year treasury. These are both good things for us. Now, usually we like to see some big number like 30, but we will take a 3. And the reason is because we are really waiting to see what is going to happen on this report on Friday. And take a look here at our 200-day moving average that we've been fighting for many, many months. I mean, almost 2 years since we've been above the 200-day moving average. And currently we're 1, 2, and probably 3 days that we will be closing above the 200-day moving average. And you know that I always say, to me, that then creates a floor of support that hopefully will keep us from falling back down. Now, that is truly going to be dictated by the report that's going to come out on Friday. So where are home loan interest rates with a day like today? Let's jump over to the Brent Bruce Daily scenario here, which is our very well qualified 30-year fixed conventional. And make sure that if you have not, that you do like, subscribe, and share if you appreciate this information, because we do send this information out pretty much every single business day and keep you updated on what is happening with home loan interest rates. And this is real time. You are looking at our information here. We are mortgage brokers. We search and survey multiple banks at the same time with a system called Loan Sifter to be able to see where the best rates are today. So right now, Flagstar Bank is leading the charge here, 6.125% with a little bit of a credit. Now, of course, if you watch this show often, you know that we've been battling with about 6.5%, 6.49, back and forth for a number of weeks. And then we saw the banks giving us less and less cost to buy a better interest rate, but they just weren't giving us a better par rate. They just weren't giving us a better zero discount point rate. Even though for maybe only a half of a point, we could buy all the way down to 5.99. It's an interesting dynamic that we're seeing play out here. Now, they must be feeling a little bit more comfortable today because we're getting a 6.125 with a $659 credit from Flagstar. PRMG, again, a name that we haven't seen for a while, right behind them at 6.125 with just a little bit of cost, $76. Here's United Wholesale, which is kind of the benchmark, 6.125%, costing $324. And 11 Mortgage, which always is in the fight, 6.125 at a cost of $871. Now, let's open this up here and see how much it's going to take to get to that 5.99 that we always like to take a look at. Well, 6% is where they're at here. It's costing, just over a quarter of a point, 0.27 with Flagstar. But look over here. Let's go back to United. They seem to be more aggressive with their buy downs. So 5.999 is costing 0.135, only $486. Now, I always like to point that out here. And let me pull up this scenario for just a moment. There's a scenario that we're talking about here today to make sure that we are in compliance. Now, I always like to talk about, does it make sense to buy a lower interest rate? Well, for $489, most likely when a client calls me today and has that scenario, good credit, good down payment, all that, good debt ratio, and I offer them a rate today on a 30-year fix, most likely I'm going to say, look, the 5.999 is only costing $476. That's the rate you should be going with today because it gets you in the fives. Now, people love to hear fives. It is a psychological number that they want to hear. They don't want to hear 6.0. They want to hear 5.9999999, but they don't want to hear 6.0. That's a psychological number that they're trying to get to. Now, we are expecting the fives to be much more prevalent if we get a good report here on Friday from the Bureau of Labor Statistics. And again, when I say a good report, it's actually a bad report. So we want the BLS to show much less number of jobs created than what the market is expecting. So if we hear that, like you see there, the ADP report saying it was like what 135 or something like that, that's going to mean that the employment world is not as rosy as it used to be. And we talked yesterday about the fact that that is an indication of inflation coming down and the market contracting. And of course, they're all talking about us heading into a recession. Whether we, already are in a recession, we shall see. But we definitely see things slowing down. I see it. I know you see it as well. Inflation is coming down. The Bank of Australia, the Bank of Canada, both halted their interest rate increases. So they're equivalent to the Federal Reserve, like our Federal Reserve hiking the federal funds rate. Both of those countries, Australia and Canada, did not raise interest rates this time. So they are setting the way, they're paving the way for us to not have to increase the federal funds rate the next time that the Fed meets. So these are all the things that we wanted to see as inflation begins to top out and then hopefully begins to come back down. And then we're going to be able to see interest rates continue to go down and hopefully hit that projection of 4.999 by July the 1st of this year. I will keep you posted as we get closer to that big BLS report that's coming out here on Friday. Let me know if you have any questions. Do make sure that you like, subscribe, and share. I'll get back to you tomorrow.